Okay, so I could bore you to death with charts and indexes, the latest news, and a lot of other financial data, and I would love to do that, but no, we're not going to do any of that. I'd like to explain this in an easy way so that you can calm down that one-word uncle of yours that everybody seems to have in their family the next time he tells everyone that in this nigh. So, is the biggest crash ever coming? Is the recession going to eat us all? Now these are excellent questions, my fellow human, since YouTube or the internet in general are full of people calling out the great crash, the great recession, or other great bad stuff for that matter. But let me tell you, they are all idiots. I mean, I'm an idiot as well, but they are idiots with the wrong opinion. There are extremely rich people out there who are all saying the biggest crash in history is coming. And you're probably thinking right now, when these people say that, why should I trust you, little F-boy, with your silly drawings and not them? And well, that's simple. You shouldn't. Okay, bye. No, actually wait. I'm going to show you why the biggest crash isn't coming yet, so you can sleep peacefully and calmly. And I'm going to explain everything in plain English so everybody can understand. Sounds good? Good. Good. The biggest crash in history is coming. Just not yet. You see, many of these guys calling out the next big crash do it regularly. They say it's coming in March, or no in April, or no in June, or no in July, or no in November. Eventually one of their predictions will be right, and then everybody thinks that one, they write a book about it and make a lot of money. Wait, that is a legit business model. Let me write it down real quick. Rip people off by scaring them. Okay, great. So how can it be so certain there is going to be next crash? Well, our economy roughly follows this wavy line here. Ooh. And can be divided into 4 phases. Expansion, peak, recession, and trough. You could also call these good, very good, oh no, and we're all phase. But actually it's not that bad, because after that the cycle starts all over again. Now you could think that what we gain here is all lost here, but that's not the case. In reality, this graph would look something like this. It goes upwards. That means there's growth over time. These little spikes are not important for us because these are just seasonal fluctuations, so away with that. Now you can see our cycles more easily. See, roughly the same wavy motions and phases. This graph shows the GDP of the USA, by the way. Oh, GDP stands for gross domestic, boring. Okay, basically the GDP shows how healthy the economy of a certain country is. And as long as this goes up over time, it's good. By the way, it doesn't matter if you look at something like the GDP or some index like this that shows the performance of the stock market. All these follow roughly the same phases, maybe with other names, but that doesn't matter for today. This is just to show you that living in our economy or investing in a stock market is always a bumpy roller coaster ride, and there isn't much you can do about it, but it really helps to understand all that stuff. The first and probably most important thing is, don't lose your head, which is, you know, always a good plan to have. But what I really mean by that is, don't panic. And I know that sounds ridiculously easy, but the moment you see the stock market drop 30% overnight and all of media telling you the world is going to end, it's going to be a tough one, you're probably going to throw your brain out of the window. But stay calm, at least for a few minutes, then grab your chainsaw and pay your annoying neighbor upstairs a visit. That was a joke, please don't sue me, YouTube. Where was I? Ah yes, stay calm. I know that is easier said than done, but whenever our economy goes from very good up here in the direction of wolf, all the market gurus and media pretend that this is happening for the first time. Because they make money with it. A crash, a recession, and so on happen every so often. That is normal. And that is why I said in the beginning of the video that the biggest crash in history is not coming yet. There might be a crash coming, it's just not going to be the biggest one ever. So let's look into that a bit more. Look, this graph is the S&P 500, which shows the performance of the top 500 US companies over the years. Here you can see the bump caused by the Great Recession in 2008, and here's the bump caused by this. No, wrong picture, I mean this. And this bump is where we currently are. These drops look massive, but you have to keep the right perspective. Compared to where the market was 5 years ago, we are still up 60%, despite these 2 big drops. Okay, but if there's no giant crash happening, then what? Listen, no one, absolutely no one can really predict what the market is going to do. Not you, not me, and also not these guys. All we can do is look at some indicators and influencing factors. And there's nothing that influences the markets more than fear. So let's have a look at it. Remember when the pandemic first started? Yeah, you 2020, and there was no toilet paper anymore? Yeah, that was not because there was an actual shortage of toilet paper. Not at the beginning, that is. But as soon as people panicked and started stocking up on toilet paper, that created a shortage. And the same kind of fear can also influence the market / our economy. I mean, imagine this. We ask your weird uncle what he thinks how the market will go. So? Okay, see, there are a lot of people out there that are like him. They see something, they panic and then... So, yeah, consumer sentiment might be very low, but there isn't much of a point in asking the average guy about the future. If there only was a better way of measuring fear in the market. Oh wait, there is. Meet the Volatility Index, or VIX to be short. It is calculated in real time and it attempts to measure the volatility of the S&P 500, which... Shut up, boring. Okay, basically the VIX measures how fearful people in the market are. And currently it shows nothing out of the ordinary. Just so you know, the higher this green line peaks, the more fear there is according to the VIX. And historically speaking, the market has never bottomed without the VIX going over this level. Again, here's the 2008 Great Recession, and here's the hit from the pandemic in 2020. And what we see today is nothing in comparison, and that is a good sign. It means that people with a lot of money at stake in the stock market are optimistic about the market in the near future. But wait, there's more. Something you have to know about the stock market is that it is forward-looking. It looks into the future and is trying to predict what's going to happen. And that is why in 2020, for example, we saw this big drop followed by a quick recovery. There was a lot of uncertainty in the beginning, something that the market really does not like because uncertainty kinda blurs the forward-looking prediction ability of the market. But when people realized the world was not going to end, they dropped a lot of their fear and the market recovered quickly. Well, yeah, printing more than $3 trillion in less than a year might have helped too, but whatever. I told you about the psychic, future-seeing ability of the stock market because it's using it right now. The fact that we have inflation going on is definitely not good, but it is something that the market predicted. And also the current data showing we've been in a recession for the last 6 months is something the market predicted. The recent actions of the Fed to encounter inflation, also something the market predicted. Basically, whenever the stock market predicts something and ends up being right, the market goes up. And that is something we currently see. Wait, didn't I just say we were in a recession for the last 6 months? Yeah, that's right. Aha! So the world is currently ending. No. Still no. The data we have regarding recessions are based on a GDP, the thing that we looked at a couple of minutes ago. GDP data is always 3 months old, so we can say that we were in a recession in the last 6 months, but not that we are currently in a recession. And again, even if we are in a recession right now, it is most likely going to be just a recession, not the recession. So eventually there will be the biggest crash and the worst recession in history and probably another one after that. It's just that no one knows when. And there just isn't enough data that shows the world is ending compared to all the data telling us it's not. For example, oil prices are declining, unemployment is low, prices for international shipping are going down again, and so on and so forth. So... And now come on guys, give me a kiss. Mwah. Subscribe!